Hi guys, welcome to Gold. Today this video is brought to you by the coach. Remember always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We are going to start our video with the economic calendar. On the economic calendar for Monday, there are no important economic headers to be released. Just keep an eye on any headline comes about the tension between US, UK, and Iran. That's all for the economic calendar. We will be moving now to have a look at the numbers. On the last trading session of Friday, we have had a trading range from 1420 to 1452 plus. Numbers are rounded and the market is closed. Gold spot printed a close price above 1425 on the last trading session of Friday. The market is closed. Gold is trading in a bull trend above its all daily symbol moving averages. And for the RSI readings, we are overbought on the weekly chart. A situation could force a correction. For the support levels, it's 1420 followed by 1417, and then the area from 1415 to 1411 will act as a support. For the resistance, it's 1427, then 1431.7, then 1438. That's all. We'll be moving now to the trading strategy. Fundamentally, gold bulls are backed by the fact that major central banks around the globe are on the move to ease their monetary policies. Other countries that does have their currencies linked 100% with the US dollar started easing, in fact, with a 25 base point rate cut. Such an environment is so comfy for the prices of the metals in general and for the gold especially to appreciate, considering that these are non-yielding assets. As we say, you cannot separate politics from finance, and the President of the United States, Mr. Donald Trump, wants a strong financial or stocks market. He tweets usually when any of the major indices reach a milestone. He said he sees Nasdaq about 10,000 points and S&P about 3,500 points. Let's say he considers a strong stocks market as one of his achievements during his first round as the president of the United States. And it's obvious that he wishes to be re-elected again. And he sees this as one of his achievements. We cannot neglect this fact. Also, his administration has a clear agenda to weaken the US dollar, and by then they will have a better position when it comes to trading with other countries, especially with the European Union and China. There is another important factor that supports the gold's rally, which is the coming also from the US equity market. 65 base point rate cut is already priced in the US equities, and if the Fed comes out with no rate cut at all or less than 50 base point rate cut, there will be a sharp correction in the US equities, and gold is going to shear up and to be protected due to its safe haven quality. Speaking of the technicalities, technically gold is trading in a bull trend above its all daily symbol moving averages. The price dipped down on the last trading session of Friday after peaking to 1452 plus. It was Friday, the weekend, profit taking took place, and the mixed signals from the Federal Reserve Bank pushed the price down. Uh, what I have said, though, of what I have said so far, gold managed already to stay well bedded above its 20 days simple moving average. From is looking to short this rally. I would say it's not advisable. It's a bullish market. In a bull market, you do buy the bullbacks, and in the bearish market, you do sell the short term rallies. This is the playbook. This is how we have to do it. I will share with you this idea on all the charts from the 1 month to the 1 hour. Gold is trading above its major SMAs. Simple moving averages: 20 periods, 50 periods, 100 periods, 200 periods. If gold price declines below 1413 and it closes below this figure, it could be heading toward the major support 1370. It could be. Then maybe you could play a short that at that place. Don't get manipulated or tricked by the cheap advice on the chat rooms that gold is done to the upside, and this is the biggest sell in the history of $200 toward to 1200. I don't think that this is going to happen. If you do insist to do the wrong thing, do it at least on the right way. Wait until gold closes below its 20 days daily simple moving average below 1413 and short it from there. I see things in a different way. Look at the 50 days simple moving average. It's now 1355. As long as this figure is less than 1370, gold bulls will keep pushing the price high and higher and higher. This is their market floor. If they wish ever to see the $2,000 gold price shouldn't find any acceptance below 1370. On the coming week, focus on the ECB meeting proposed to take place 25th of July. A rate cut is expected on the euro either immediately or to take place in September. Both cases, gold will cheer up on this news and the euro shall fall. The coming week, I am a buyer of any dip. Also look for the tension with Iran is rising, and guess what, this time they are messing with their friends. I hate to bring politics to finance, but you cannot segregate them from each other. Also, on the other hand, our advice is limited on gold and silver at times. However, I see a rising opportunity for an oil rally. Accumulate oil and put your stop loss below 50, target 70 and 80. And if oil price closes above 61, triple your quantity. Good luck to you all. Please share, like, and subscribe, and I will see you tomorrow in another video.